Welcome back to another trade recap with me, Jay, and today I'm going to go over all these trades you guys see on the screen, the exact strategy from A to Z on how I was able to enter them all and how I was able to determine my draw and liquidity and direction. So without further ado, let's get straight into it. So for this first setup here, it's very simple. All I'm doing is following the trend. If price is going to the top right of my screen, we're bullish. If price is going to the bottom right of my screen, we are bearish. We're bullish clearly here, so I was looking for basically just only longs. And I believe this is even all-time highs on gold. Yeah, so if you're trading all-time highs, keep trading with the trend. So basically here, initially we did miss a stop on our setup. I did mark out here, made it low, that made a new high, took out that low here. I missed this unfortunately, so if you see, you could have taken this as your stop on our setup here, the low protecting that new low, targeting the next high. You can get about 4.85 risk reward off of that trade, so it would have been a good stop on our setup, but I missed that. And then we tapped into or made a new break to the upside, and we have a new origin. So this origin here, PY, I was looking for a setup off of, and I got my OB inch model here. Let me hide my indicator real quick. Here is the OB inch model right here. And I have my limit order set there. Stop loss put at the low. You could have also put your stop loss covering the OB if you want. You could have doubled your R here. Me personally, I didn't. Just because for me, since there is no internal pullback here, they're all bullish candles. I don't know. There was just a hard place for me to really set a stop loss. I usually do set it at the low anyway. So where's my target? Very simply, just the next high. So that's basically it. I was looking for this trade. Nothing much else to it. Limit order at the OB once I tapped into this origin that was fully mitigated, that got fully mitigated. And there's more setups later, but I think I hopped off the charts here. There's a setup here, taking out this low. This might be a 5-minute stop hunter. Yeah, it is. So you can see this is your 5-minute stop hunter. But to me, in my opinion, like with a trade such as this, I would just consider this a sweep at this point. A stop hunter is more so something like this, where we have these small pullbacks, not a huge pullback like this. And I believe we even came back to 50% here. We did. So we have two structural breaks here. This first break here and this other break above. We have these two breaks here. This is your external structure break. This is your internal swing structure break on the right. And since we came back to 50% here and then went higher, you can consider this as your liquidity sweep point. And essentially you could have caught a nice setup here using the same entry model I used here to the upside, which your entry would have been here off the OB, stop loss below, TP for about 2.89 risk to reward. Now, some people might wait for this PY here below, which in my opinion is higher probability, but not always the case, and it would have missed you on this trade. Some people may wonder, why does this happen? Why do we miss mitigations like this? It's because this, if you're a 5-minute trader, this is actually just a 5-minute stop hunter where you can, like I said, for stop hunter, sometimes just cover prior to mitigation. And I mean, this is insane risk reward, right? 15. But like I said, because of the range on the 1 minute, how there's such a big range here, in terms of just like, this is not your typical stop hunter range where it's like this, very small. This is a much bigger move to upside, as you can see. That made a bigger break. So yeah, I wouldn't be using that really as a stop hunter here. I'll probably just take this as a normal setup, and if you miss it, it's okay. It is what it is, and just move on to the next setup. Next setup here, I was really looking for shorts over here, okay, and I'll explain why. Because we have structure wise, if we go to the higher time frame, let's see, whichever time frame looks the most clear is the time frame you want to be using. This does come with a little bit of practice, but it shouldn't be too crazy. We have 30-minute demand that got mitigated here. This should make a new break structure. We did not, okay, which is okay. We come back to get a mitigation cycle. And so here is the next demand that should hold ideally if you want to go higher. And then if you want to go to the lower time frame, you clearly see we fail this demand here. So not only did we fail to take out this high, we also failed the demand, which then means this is a FBOS here, okay? This is FBOS because now we took out the low that's supposed to make a new high. So now this is your basically change in character, or break structure in a sense, to the downside. Not a change of character because this low did not make a new set of high. It is just an internal low, that makes sense, internal swing low that failed to make a new high. So this is just a break structure to downside, and now you're looking for shorts. No more longs for me, up until at least we come back to down here, you know, to 50%. If you want to use this as 50%, you can. There's a pretty big gap here to fill to the downside, so we want to be looking to trade towards that gap. The first setup I here took was a stop hunter here. This high made a new low internally, and unfortunately, my stop loss was too aggressive here. It is a small range, so keeping that in mind, in the back of my mind, I knew it was a lower probability setup, but I kind of wanted to try taking it. And yeah, I didn't want to miss the move, and I got in kind of like a FOMO-ish kind of trade, to be honest. So stopped me out early, and it later ran. I honestly didn't notice this in the moment, but there was a setup here to the downside off this IFG here for 4RR. Anyway, all good. It is what it is. Let's continue with my bias here. At this point, we took out, we did not take out new session low yet, but I know we were bearish because we have this demand here that also failed. We failed here. So I knew we failed not only once, but even twice. So pretty clear that this here should hold. I did take a risk here in terms of we could have got a stop under above this high. I was going to take a risk to maybe see if we can get a quick continuation here, because this is pretty obvious to me that price should be showing no signs of being bullish at all here. We failed twice here, and like I said, we have a break of structure here to downside. So we're not bullish anymore. The left is bullish, but the right is bearish. We want to follow the right trend. So here I got 2R targeting just near session low. Again, don't want to be going for anything crazy. You don't want to be going for something like this down here. For example, even though price could go there, it's not going to go there in one move, not all the time. Because as you can see, after we take out this prevalent low on the right, look what happens. Boom, we have a massive, massive retracement. So I'm okay with you guys taking these retracement moves, right? Like taking this long here, taking this long here, even though they're counter trend, I'm okay with you guys taking it, especially if you wait for manipulation and you get a higher win rate taking those setups. But essentially, this was just me following the trend here. I just took, like I said, in this case, a 1-to-1 counter trend trade off the OBH model, off a sweep, just going for a 1-to-1. And yes, in hindsight, I missed out on more risk reward, but that's not always guaranteed. And I got off the charts, I believe, after I took this trade here. This is around 1 p.m. So I got off the charts there. Now let's move on to the last few set of trades. Now these last two set of trades here, I believe, so I wrote down notes here in case I forgot what happened this day, but we hit 30-minute supply, right? We had this break of structure. We have this break and this break as well. We tapped into 1 hour demand, then we tapped into 30-minute demand or 30-minute supply. And then, so because even though we hit this 1 hour demand and we are bullish on the left, which means we should be ideally doing something like this, I did see everything here in terms of POI wise was fully mitigated on the 1 minute. That's why I was like, okay, we could low-key just run all this and at least come towards this low demand here at the origin here. However, I didn't realize at the time there was a 15-minute demand here. I might have actually realized it at the time, but to be honest, since there's no 1 minute, I wasn't too confident it's 15-minute demand holding. And so I took a short here. Again, not the greatest entry here. Just using a internal OB continuation. Pretty low in the leg, so lower probability for sure of this holding. Better to wait for the stop hunter. But you can see eventually I didn't go break even here. And yeah, I think I got a little too greedy here. Basically with my TP as well. And instead of TPing at the next internal low, which is only 1.4R, trying to go for something more. And yeah, eventually stopped me out here. So now last but not least, we have another setup where I was trying to basically play it to the downside. We have inducement here marked out clearly for this 5-minute PY above. Switch to 5-minute time frame. There is a 5-minute PY. Let me make it more precise. There it is. And I was looking for a downside, like I said, to go to this origin, because at this point in time, I was like, okay, I guess we have a 15-minute demand here. But I was still trying to see if we can get to this origin, because basically this 15-minute demand actually was acting really weird. Now, granted, this is on gold. There's more new value, new structure, liquidity sweeps as well on gold. So this is something you can't expect if you're trading a pair like this. But you clearly see like we have a sweep here within the same POI, didn't go to the next POI, and eventually we held this low here by, it seems like we held this demand here, and then we eventually went higher off this 15-minute ultimately instead of going for the origin. So my target definitely could have been better here, with the short here. Instead of going for this like origin here, I could have just went for a 4.7 RR and just called it a day here. But I took a break even on this trade because I realized what I did on the last trade, being stupid here, with my profits. So I realized this is a pretty safe trade to go break even, just because it doesn't make any sense for us not to go to this origin. And if we do not go there, we're most likely holding a sweep within this 15-minute POI to go higher. And that's actually ultimately what happened after. If you play out price, we ultimately went higher towards a new 1 hour high off this 1 hour demand, which makes sense. So on this day, I did make some critical technical mistakes. The main one, like I said, is really just me trying to continue trading the trend on the right when we already hit a valid area on the left for us to return back to the trend on the left, such as this. This makes sense. So anyway, hope you guys do enjoy today's little recap video, and I'll see you guys in the next video. Peace.